Hello and welcome to a new episode of Metis Capital. We will try to give you our perspective on emerging frontier markets on a quarterly basis. Today is the 8th of October. My name is Grapengiesser. I'm the CIO of Metis Capital, and together with me today I have David Nicholls, who's a PM for our global emerging market strategy. As always, we will try to provide you an overview of what has happened in the markets. David, why don't you start and give us the numbers, please?
Sure, yeah. So Q3 in general was another fantastic quarter for emerging and frontier markets, which returned 11 and 15% respectively in US dollar terms, which is obviously important. And then, but I think what's even more interesting is if you look at the year-to-date returns, and yeah, with emerging markets returning 28% year-to-date, this is the best year we've had since 2017. Especially when you compare to how the S&P's performed. So yeah, a really good backdrop. And I think one of the things that's really interesting is to compare the US dollar and the euro return, because while emerging markets 28% dollar return, 13% in euro returns. And I think that really speaks to the fact that a lot of the performance you've seen year to date has been really driven by FX rather than a sort of crazy rally. And that's why we call it in our CIO letter more of a melt up than a sort of unconstrained rally, so to speak. And so there's definitely more to come. If you look at figure 2, this is the largest markets. This is around 81% of the emerging markets, and clearly a very strong year across the board. Korea really standing out with a 58% return. But yeah, obviously a large part of the returns in emerging markets driven by China, returning 42% year to date. Jacob, you're based there, so yeah, what's happened in China so far?
Yeah, if someone asked me in the beginning of the year, China would be up 40% on the back of Trump introducing massive tariffs on China and the global trade war, I would probably be telling these people as well, that's a joke, right? So I think China has been surprisingly strong, but that is on the back of a lot of good things, right? I think fundamentally you're seeing the Chinese tech companies now sort of really fighting with the US ones. It started with DeepSeek in January that proved that the Chinese can deliver AI or large language models at a fraction of the cost of US peers. And if we look during the quarter, Chinese equities were up 21%. A lot of that was driven by the so-called southbound flows. So that is mainland investors taking money from the mainland and putting it through a mechanism on the Hong Kong Stock Exchange. And the Hong Kong Stock Exchange, you have a lot of the big companies listed, like, for example, Alibaba. So Alibaba was up 58% in the quarter and more than doubled year to date. So just spectacular performance. The company was very cheap before, so I think it was probably bound to revalue at some point. But I think really the key thing here has been that they have introduced their own AI tool or large language model that is, according to Alibaba, on par or even better than ChatGPT 5. So I think this is really what's showing that they are up there fighting. It started, as I said, in January with DeepSeek, but since then, of course, all the big Chinese tech companies have launched their own large language models that are well for various purposes, but I think that it's really showing that they can compete. Separately, of course, with all of these AI tools, you need a lot of storage, right? You need a lot of cloud capacity, and Alibaba is by far the Chinese largest cloud operator. So they recorded, for example, triple-digit growth in cloud revenues in the second quarter. So just highlights their sort of potential and growth in that area. Separately, they announced a $52 billion investments into cloud and AI over the next 3 years. And again, just showing that they're sort of up there with the big sort of tech giants of the world. But it's not only, of course, about Alibaba. I think if we look on other Chinese companies, they've been doing spectacularly well, right? We've been adding 5 new companies in the quarter, many of them sort of small caps, and you can see the returns here, right? I mean, You have small companies like Harbin Electric up 40% in the past 1 month. You have many of these companies up, 50, 100, or even hundreds of percent year to date. So it's really, the animal spirits is back to the Chinese markets. And a lot of that has been pushed by Chinese investors themselves and less so by the international investors. I think we need to wait still a bit for the international investors to come back. But of course, if they do, clearly you can see the Chinese market taking another leg up. Okay, but David, can you please talk us through what happened outside of China?
Yeah, sure. So outside of China, really particularly looking at Taiwan and South Korea, another good quarter, 15 and 13% returns. And really here, it's all about this momentum in the AI sector. And of course, all eyes were on the Q2 results of the hyperscalers, the Microsofts and things. And I think what you saw is they're now generating meaningful revenues from AI, right? So it's not just a cost center anymore. And even more importantly, probably for our companies, they've increased their capital expenditure. So Microsoft was previously guiding 85 billion on AI capex this year. It's now 100 billion. Google was 75, it's now 85 billion. And where does this investment flow to? Well, of course, NVIDIA receive a lot of this, but it's also these what we call the AI enablers that are really based in emerging markets, particularly in Taiwan and South Korea. So TSMC being the extremely obvious one, manufacturers all the chips are NVIDIA. But on the back of these sort of news, you're seeing reports of really significant ASP or price raises for TSMC, which is really going to boost their earnings into 2026, and means that actually the stock looks very reasonably valued with some earnings upgrades to come, we think. Another example, we have Hynix, one of our largest names in South Korea, produces 90% of the memory for NVIDIA's NI chips, and you're seeing a really broad sort of upcycle in the broad sort of memory space, which is really going to give them a lot of earnings momentum as well. So yeah, really all good there, and I think this is going to continue with these sort of Stargate announcements that you've seen recently. India, I think, stands out on the downside. Unfortunately, it's basically flat year to date and over 12 months. It's something of a perfect storm of headlines and news flow really in India. I don't think any one of them on its own is that particularly negative, but really when you put them all together, the liquidity moving out of India and towards China and Korea, lower growth, nominal growth as inflation falls, headlines on geopolitics and tariffs and things like that, it really sort of sucks the excitement out of the market. But as equity investors, of course, we look at the fundamentals, and the fundamentals aren't bad. They're also not fantastic, right? And I think everyone's looking at the consumer segment that's just not growing much, really at all. In fact, we haven't got much exposure there, so that's not a particular concern for us. But what we're really looking forward to is sort of consumer cyclicals and demand volumes there to really start picking up, which we hope will kick in towards the start of sort of Q4 or Q1 next year, partly due to a raft of sort of fiscal changes the government has made. But Jacob, yeah, maybe if you take us a bit through what happened in frontier markets.
Yeah, right. So if emerging markets was a lot about China, a lot about tech and how that sort of spills over positively to companies in emerging markets, frontier markets are less correlated. I think that's one of the advantages of frontier markets, that they are a little bit living their own life. But they did pretty well. The benchmark was up 15% year to date. 15% during the quarter and 38% year to date. It was very much Vietnam leading the rally, and maybe some big companies in Vietnam that actually we don't own leading the rally. A soft dollar is, of course, good for emerging and frontier markets in general. But I think the interesting point here is actually that despite the strong performance, frontier markets are trading at record low valuations. So it's 6.5 times earnings for next year. That is typically with what they say mid-teens type of profit growth. And these are close to record high discounts of 53% to emerging markets and 68% to developed markets. So yeah, I think it's a very interesting investment case. But yeah, David, it's been a pretty busy quarter, I guess, in terms of travel.
Yeah, it was. I mean, despite the holiday season, actually, we were. I guess our real focus in the GEMS team was on China and Korea. We had the analyst house in Korea, and of course, Jacob, you mentioned a lot of the changes we've been making in China on the back of this really deep dive into this sort of huge tech sector in China, which is massive and complicated, but a lot of it, a lot of opportunity, right? If you know where to look. But yeah, I think maybe Jacob, you could speak about some of the really interesting sort of trades we've done in GEMS, maybe for example this Renew, and then also a bit more detail on the Dubai trip you made earlier this quarter.
Yeah. So for if we start with the Renew, right? So we are not only buying and selling shares, we also get involved, as they say, when we think something is wrong, or actually when we think we can make money on it or make money for the unit holders. So Renew is a good case. It's an Indian renewables company listed in the US. And there was a bid launch for the company. That was at an 11% premium to the market price. I think a relatively small premium. Typically premiums are larger, 20, 30%. So we engaged with the company, we spoke to board members, we wrote letters, and eventually we managed to increase the bid from $7 to $8 per share. So it was a 13% uplift from the first bid to the second bid, which meant that we got a 30% return on this investment. And again, that's 30% basically without taking any risk. It's a so-called arbitrage type of deal. This is not the main type of deals we do in the fund, but I still think it helps and it adds a little bit of performance if you can do that. And I think it's nice to see that our engagement, resulted in a positive outcome. Secondly, yeah, I mean, we traveled the time. We met with some companies in Dubai, and I think it's a fascinating place. For example, you can buy shares in a real estate developer, growing at 20-25% per year and trading at 6 times earnings for next year, and that's with a 8-9% cash dividend yield. We even looked at utility companies like the toll road operator, and a toll road operator that should grow maybe at 3-5% per year. They actually report growth of 40%, because they just introduced new gates. I mean, very simple. They didn't have gates, so you can basically not pay the toll if you went on one of the highways, and you paid if you went on the other one. So yeah, fascinating place, and growth maybe in places that you didn't really expect. But okay, if we move on to the outlook, perhaps, David, what's next?
Yeah, sure. So looking ahead, it's fairly obvious that sort of the narrative, right? We've got a weaker dollar and falling interest rates globally, not just in the US, but across the markets we invest in. And that's a very supportive backdrop for emerging and frontier markets, right? Particularly the sort of the faster growing companies that we like to find, assuming the valuations are reasonable. And on top of that, you've got this sort of this trend that I discussed, and investors are really increasingly starting to realize that a lot of these AI enablers or other sort of leading edge technology companies, if you look at sort of batteries or EVs or robots, are really based in emerging markets. And of course, these companies are trading at much more reasonable valuations than some of their US peers. So I think it's a really positive backdrop. And I think what's more interesting maybe is that all of this is getting recognized. So we personally, as East Capital, have had a record number of client meetings and requests and interest in emerging and frontier markets. And that will start to filter through into actual inflows into the asset class, assuming nothing sort of significantly goes wrong. So yeah, no, so I'd say it's a really positive backdrop, and we're excited about what can happen going forward. But with that, yeah, thank you very much for watching, and yeah, please feel free to reach out to us with any questions.